Hey guys, Lance Martin, Coldwell Banker Town and Country. We are back. So here we are, February 2020 in our real estate market snapshot. I've changed the logo. I had a lot of people point out, and I think Adam told me last time you had the 2021 market snapshot logo or market forecast logo. And we've ditched that. We're all updated for 2022. We are diving in. A lot of exciting stuff going on. A lot of stuff. Yes, we're still doing the forecast. We are not going to do a live event though. Just for those of you that know, we were playing around with the exact date to be determined. COVID, Omicron, all of that sort of stuff. It was just too difficult to put on this type of an event with the uncertainty that we were going to have to cancel it. So again, this will be our third year in a row. So we're 2 years into coronavirus, but this is impacting us for 3 years in a row for our market forecast as far as a live audience is concerned. Why is that? Because we lost the first one in March of 2020, and then of course last year, and then we were all ready to roll for 2022. And it's just been an odd start to the year with that sort of stuff, even though it appears as though we're coming out. Anyway, I just said, screw it, we're not going to do a live event. So we're going to do a kind of a drug out virtual market forecast for 2022. And maybe next year, God willing, we'll be able to get back and see everybody in person. So here we are. Same thing we've been doing with you guys for the last several months. Inland Southern California market, what does that mean? Basically, let's just call it the Inland Empire and the West San Gabriel Valley. That's what I'm referring to. West San Gabriel Valley, basically west of Los Angeles and the Inland Empire. And again, you guys know where you're at, otherwise you wouldn't be watching my stuff. So we're going to talk a little bit about interest rates. Yes, interest rates are up. Fasten your seatbelts. We are in for quite an interesting ride, and it's just begun. Today is February 4th. The bond market, last I heard, was up over 100 basis points. I thought I heard 150 basis points. I may be wrong. I haven't checked. But anyway, interest rates are volatile, to say the least. So we're going to talk a little bit more about that near the end of our presentation today. And last month, I did not give you guys an eviction moratorium update. If you watched a different video I did, I was like, hey, not a whole lot's going on in the eviction market. It's very quiet. Even though the moratorium ended several months ago, we're still keeping our eye on the end of March of 2022, because that is when the California COVID Tenant Protection Act, I don't have it exactly right, but you know what I'm talking about, is basically set to sunset, which is March 31st, 2022, a couple months from now. Last month it was very quiet, not a lot of discussion on what was going on. I deemed that to be good news. Silence is good news in relation to this. Well, there is no longer silence. There is a lot of stuff going on. The County of LA came out with one dissenting vote with the Board of Supervisors, and they have extended that moratorium for the County of LA till the end of 2022. This varies region to region, city to city. So it's quite the Wild West out there. So we are starting a new thing, by the way, every single Monday at 12 o'clock for the foreseeable future. Every Monday, 12 o'clock, we will be doing a live eviction update on exactly what's going on. We'll do a quick update, and then quite honestly, we're going to open it up for a Q&A, and we'll try to answer specific questions. So if you have a property in LA, you may get a different answer than if you have a property in, say, for example, the city of Riverside. But at any rate, a lot of stuff going on. I went to dinner the other day with some folks that I respect in the industry, and we kind of brought up, oh yeah, I'm still kind of dealing with the eviction moratorium, and a couple of the people that are in the know basically said, oh yeah, that ended. And I'm like, okay. Yeah, sure it did. So we still got some work to do on that, so more to follow. And if that's in your wheelhouse, we have tons and tons of information. So let's jump into our property data. So LA, Riverside, San Bernardino County combined, median price. I think we're going to start to see some really interesting stuff. Some of you guys are going to draw some conclusions. I think you'll draw the correct conclusion, and I think a few people will start to panic. A lot of stuff about market crashing and bubbles and all the rest of that. Well, if you want that, well, here you go. Here's your chart with the 3 counties. What do we have in January? We have a smaller bar than we had in December, which basically means property values have pulled down in the 3 counties combined. So if you're looking for a chart to go negative, or at least start to pull back, well, guess what? You just found one. So here is the 3 counties combined in January. To be honest with you, I'm not overly concerned about this. We'll talk more about where I think the market's going and prices and all those fun things. But for those of you that are watching, waiting, anticipating bad news, well, there you go. There's your first chart that you can point to. I guess you'll have to keep an eye on the other ones. Same chart, 12-month. I didn't put my trend bar on this particular one. I forgot it when I created these charts. But anyway, it just isolates it a little bit. We'll talk about what this looks like when we summarize it. And here it is. The three counties combined, $625,000. Still up significantly, 15.7% over the last 12 months, which was 540. 2 years ago, 468. That's a 33.5% increase over 2 years. You know, we've been throwing around these numbers, 20% year-over-year increase. It still applies if you're talking kind of just generally, but the three counties combined over the last 24 months is about 33.5. And you'll notice if you're really paying attention, and I know a few of you are, and others are getting lost in the charts, like Adam, our video guy, says, Lance, the charts are too much. I get it. They can really be kind of just blinding. But you'll notice month over month, these can change dramatically based upon whatever that month was 12 months ago or whatever that month was 2 years ago. But the gist of it is the three counties are still up dramatically, 33.5% over 2 years. Supply and demand for the three counties, we were hoping last month that we would see some inventory increasing. Again, I forgot to put my trend bar on here, but you can see that this is not higher than this, so we basically continue to see a lesser amount of inventory. These are homes for sale on the market in the three counties. That was kind of a bummer. We were kind of hoping that maybe we'd start to see that shift a little bit. If you do want to go back a year ago, this is last January. Oops, look at that. That March of 2021 was also a little bit lower, and then we started to trend upward. If we stick on that trend, maybe we're just going to see a continued restriction on inventory for February, and then hopefully we'll pick back up in March, or maybe we'll actually see a little bit of pickup in February and then continue through. But at the end of the day, we didn't really see any improvement on open listings or new listings in the month of January. In effect, flat. I mean, the bar's down a little bit, but in effect, flat, which we need some houses to sell. We're running out of stuff to sell. So here's the 12-month chart, same exact stuff for the three counties. I'm going to blow past that. What does it look like? A little over 19,000 homes for sale in all three counties. 17% less than a year ago, 36% less than 2 years ago. But if you were paying attention last month, they got really excited because we're selling more houses. The pendings, 7,381 houses went in escrow in January. So we sold more than we did a year ago on less inventory, and we sold more than we did 2 years ago on less inventory. Last year, the numbers were pretty stark, but we sold about 8% more houses in January 2022 than we did 2 years ago, and we had 36% less inventory. So more houses on less inventory. Oh, by the way, what does that mean? Higher prices. So the trend continues. Los Angeles County all by itself. Here we are. There's your chart. I got the bar. I did the first county and I forgot to put my trend bar in. So there's your 24 months. There's your 12 months. And again, this is LA County. The first chart we showed had the three counties combined and we saw the little pullback in price. Well, I think LA County was kind of responsible for it. This is all of LA County. So we saw a pullback in LA County median price in the month of January. And if visually that looks a little bit more of a pullback than it did on the three counties combined, then you have good eyesight because the other counties don't quite reflect exactly the same thing. So what does this actually look like? Median price in LA County, $763, still up 13% than 12 months ago, which was $675. 2 years ago, $585, 30% increase in LA County. So even though that bar pulled back, it's still significantly better than it was 12 months ago and 30% better than it was 2 years ago in LA County. So supply and demand in LA County, again, we're looking for the red bar. Did it go up? It did not. So same thing. This is the 12-month chart. It's kind of hard. My line actually blew out my month prior. But anyway, the bottom line is the active inventory. So if you are a buyer and you are continuing to hold strong in this market and search and search and search, try to go find that house, the struggle continues. I mean, it is what it is. And you guys know that if you're in that marketplace. So what are we looking for? 10,700 houses for sale, 24% less than a year ago, 30% less, 34% than 2 years ago. Just tough. Interesting, 3.5% fewer homes sold in LA County than last January, okay? So if you're looking for something to jump out, that jumped out at me. That jumped out because that's not going to be the case in some of the other counties. Did sell 5% more than 2 years ago, but we sold fewer homes, 3.5% fewer homes in Los Angeles County than 12 months ago. Was 12 months ago extraordinary? It was extraordinary. And quite honestly, last month was pretty extraordinary. The open escrows and the pending escrows, nothing to complain about. I make money selling houses. I mean, prices are nice, but we make money selling houses and higher prices are nice. We sold a few houses last month. So it was not a bad January, but it was less than the January before for LA County. Riverside, median price, where are we? Riverside County. You'll notice the bar looks a little flatter. Well, it is a little flatter. There is no change. Median price, Riverside County, month over month. So from December to January, today's February 4th. We're always looking back when it comes to these charts. So the January numbers were flat. This is the 12-month trend. Again, you'll just see that little plateau there. So what did it mean for Riverside County? Well, Riverside County, frankly, outperformed LA County. Bunch of obvious reasons for that. A little bit more affordable. You tend to get a little bit more demand, and it's easier for those properties to go up. So what did we do? 20% in 12 months. 44% increase in Riverside County as a whole in the last 2 years. Nuts, okay? Just absolutely nuts. Quite honestly, unsustainable. However, I think we're going to have a really good year. Remember I started off this call, if you're looking for some reason for things to be bad and values to pull back, I don't think that's going to happen. I don't think we're going to see 20% appreciation, although I talked to somebody this week who I respect that does. So how crazy would that be if a year from now we throw another 20% appreciation year over year in Riverside County, for example? I suppose anything is possible. Interest rates will have a big impact on that, but we all can agree that's unsustainable. We cannot continue to do 20% forever, even 15% for that matter, even 10% for that matter. Good Lord. All right, so supply and demand, Riverside County. Again, I'm looking for the red bar, and guess what? We had a little, we're basically flat, okay? So LA County was down. The 3 counties combined were down. Riverside County said, hey, I can do a little bit better than that. And we actually see more or less a flat amount of inventory. We wanted to see it go up, but if it's not going to go up, I'd rather see flat than going down. So that's what we're looking for there. I felt pretty good about that. There's your 12-month chart, same exact data. What does it mean? 4,400 plus homes, 7% fewer than a year ago, 38% fewer than 2 years ago. But again, nice numbers. We sold almost 12% more houses on 7% less inventory. 10% on 38 from 2 years ago. So Riverside County kind of feels a little bit better in January. So I'm a little bit more optimistic going back to that red bar. Can I go back to the red bar? Even though it didn't go up, the fact that it didn't go down makes me feel good. So let's stick our neck out here a little bit. Maybe when we run the February numbers, that bar will start to trend upward, which is what we're looking for. And if you are a buyer, that is what you are looking for. Give me more houses to choose from, please. All right, so this is the numbers we just showed up. All right, median price, San Bernardino County, again, same thing, except San Bernardino County actually ticked up ever so bit little. Okay, LA was down, Riverside basically was flat, San Bernardino ticked up just a smidge, but again, for all intents and purposes, let's call it flat. Okay, basically flat. What does the numbers look like? 505, 20% appreciation. That's 420 from a year ago, and 30. You know what? I'm going to double check this number. I think I may have had a mistake on this. I think that's wrong. So San Bernardino over 2 years. Don't look at that. Don't look at that 31%. I think I missed that one, so that might have been a fat finger in there. But the 20% is correct. I know that for sure because I've been living it. So that's where we are in San Bernardino County median price. How about supply and demand in the county? Again, what are we looking for? Red bars? Well, again, I know my bar kind of flattened it over. They did pull back a little bit. So I guess Riverside County is the shining star, so to speak, with inventory for January. Everybody else that we're reporting on pulled back a little bit, nothing too significant, but we don't want to see less. We need more. So here's the 12-month chart for San Bernardino. What do the numbers look like? 3,800 houses for sale, 6% less, 40% less. 3% more, 10% more. So we sold 3% more houses last January on 6% less inventory. So we're still kind of doing our thing in San Bernardino County. So bottom line, if you take a look at the 3 counties, they're still fine. You know, today I guess maybe if I'm beating up on anybody, LA County I guess underperformed San Bernardino and Riverside County. Kind of to be expected just from a pure pricing point. You know, those higher end price points, I mean, they're a couple $100,000 in higher price, or almost $300,000 higher price than San Bernardino County on the median. So that does tend to potentially make things up a little bit. Okay, Spotlight City. For the last few months, I've been doing a Spotlight City, but I was running late today, and Adam was waiting for me. I did not have time to pull up a Spotlight City and say, this is what's going on. We did Redlands, we did Corona, I think we did Rancho Cucamonga and a few other cities. So I'll tell you what, let me know what you want to see, and I will do a private one for you. So just shoot me an email, text, whatever it happens to be. Says, Lance, what's the numbers going on in my city or my zip code? Let me know. I'll pull it up and our team will send you out. And we'll get back to our Spotlight City next month. I promise you, I'll be a little bit more prepared and won't be dragging getting these things done. Interest rates. Okay, guys, here we go. Fasten your seatbelts. We have been talking about interest rates for a long time. And generally, everything that we've been predicting with interest rates has been wrong. With maybe the exception of Bruce Norris, who called out 2% interest rates. Everybody thought he was absolutely out of his mind, and we actually hit a 2% interest rate last year. But for the last several years, pretty much in January, February, everybody's been saying we're going to end the year with higher rates. That has not been the case for a long time. Well, now everybody's calling it out, and guess what's happening? If the first 6 weeks or 5 weeks of 2022 are any indication, we're going to see higher interest rates. The Fed met last week, had a 2-day meeting, did not raise the Fed funds rate. There was some discussion, are they going to do it? When are they going to do it? How many points are they going to do? 25 basis points, 50 basis points, blah, 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 blah. This stuff will make you insane. All I can tell you is there's a lot of pressure, upward pressure on interest rates, and you're going to see that. Just since we've been recording these videos, the first one we videoed was August 6th, all right? So I guess we've been going for 6 months, I guess, okay? We were at, this is all I want you to, forget the chart. I know it's mind-numbing. Just focus on this upper left-hand corner, 2.8%, August 6th. By the way, this is pulled from Freddie Mac's website. This is not an FHA, VA. This is a conforming loan. You have to have good credit, a job, some income, and basically be an A+, or not maybe an A+, but certainly an A buyer, all right? So if your credit's bruised or if your job history's been a little tough, you would not be getting this quote back on August 6th. But at any rate, 2.8% in August, then we skip to September, up a little bit, 2.88, and then we go the following month, just under 3, and here we go to November, unchanged. By the way, what you just saw, that's kind of what I've been doing for the last 4 years. And if anything, slowly floating down. Looks like we may have turned the corner on this. December, up above 3%. And January, 3.22%. And I pulled this off Fannie Mae's website just, 3 hours ago. And 3.55. My thought is right now, if you were watching this and there's a lender in real time watching this saying, Lance, no, we can't do 3.55. Bond market went nuts today, and you're probably looking at something well north of 3.5% interest rate. So there you go. We've climbed, let's just call it 3/4 of a point in about 6 months, and the Fed has yet to change the Fed funds rate, which is basically 0. So, we'll see. Keep an eye on this space. I've been saying it month after month. If you are a buyer, I would be less focused on price than I am on interest rate. Okay, if I can get myself a good interest, and by the way, 3.5% interest rate is a fantastic interest rate. It's not 2.8, but it's a great rate. So I will tell you, if you want to know one of the areas I'm concerned in, I'm concerned that the consumer and the public will look at a 3 or 3 3/4 or a 4% interest rate and say, oh my gosh, that's too much. You know, I've been doing this for 35 years. I've only seen sub 4% interest rates in the last year or so. The rest of my entire real estate career, they were north of 4% and a lot more than 4%. But We're seeing upward trends on interest rates, so just be aware. Lock your rates, use a mortgage professional, whoever that may be, and if you need some help with that, I don't really do a commercial for lenders here, but I certainly have some lenders that I recommend, so reach out to me, we'll help you out, and maybe we'll do an interview. Actually, not maybe, we will be doing an interview with at least 1 or 2 lenders on our market forecast, and we're going to talk about this. So anyway, watch this space. Okay, I kind of gave you the eviction moratorium update already, but I will tell you, if you are in this space, you really need to pay attention to what's going to happen in the next 2 months. Any indication or any hope that I had that this was just going to kind of get to the end of March and the California legislature was going to allow that bill to sunset and we were going to try to return to some sense of normalcy, that feeling is gone. And I think that's kind of what I told you guys a month ago. And I've done a couple of other updates in between the last market snapshot and this one. And I've been kind of saying, hey, it's very quiet out there. This is a good sign. No longer quiet. So if you're in the investment space, if you are a landlord, quite honestly, for that matter, if you're a tenant and this is of a concern to you, we're your place for that information. So just keep an eye on us and we'll get you all the information we can on the eviction moratorium. And Mondays at noon, every single Monday at noon, we'll connect a link that you guys can find that, and it'll just be an open forum on that. I think we're done. So that's our February 2022 real estate market snapshot. A lot of stuff going on. Let's just say the market is a little volatile. I don't expect that to change in the next few months. Oh, and by the way, guess what? Our market forecast is coming up. So you're going to see a lot of stuff, dozens and dozens of different speakers with different opinions and different takes on where we're going. So we're building up for it. And in the next 60 days, you're going to have tons and tons of content and you guys can make your own decisions. Anyway, have a great February and we'll see you next month.